Warm welcome to all the participants joining us today. We are delighted to have you with us for this webinar and sincerely appreciate you taking the time to be a part of today's session. It is my pleasure to introduce Moon and Tramp IFSC LLP, the first regulated entity for financial services under the BATF framework in the IFSC. Incorporated on 15th of July 2025 and headquartered at the International Financial Services Center IFSC, GIFT City, is a joint venture between the Moon Group, a leading SEZ and IFSC consultant, and the Tram Group, a Dubai-based firm renowned for its expertise in AML and FIU compliance services. Glad to inform you that we are the first and only financial crime compliance registered entity in IFSC. The firm is engaged in providing comprehensive financial compliance services, including AML, KYC, counter-financing of terrorism, FIU-related reporting, and other regulatory and compliance solutions. Our services extend across GIFT City IFSC and Dubai International Financial Center, that is a DIFC, and other key international financial jurisdictions as well. Moon and Tramp IFSC LLP is committed to supporting financial institutions, corporates, and global entities in strengthening their compliance framework while aligning with evolving regulatory expectations. We follow a practical risk-based and solution-oriented approach, ensuring robust compliance without compromising operational efficiency or sustainable business growth. The true strength of Moon and Tramp IFSC LLP lies in its partners, who collectively bring deep industry experience, strong domain expertise, and hands-on understanding of compliance regulatory environment. Their experience spans compliance advisory, regulatory licensing, policy formation, and the implementation of best practice compliance systems, particularly within international financial services and IFSC framework. I would now like to introduce the designated partner of Moon and Tramp IFSC LLP. Mr. Ashish Agrawat is a seasoned professional with over 17 years of experience across special economic zones, international financial services centers, indirect taxation, and clearing and forwarding. He brings strong expertise in regulatory compliance, financial services, and end-to-end business consulting, particularly in highly regulated environment such as GIFT City IFSC and other global financial hubs. His core strengths include establishing compliance framework, enterprise risk management systems, and providing comprehensive advisory support for SEZ and IFSC operations. He also plays a key role in managing business conduct, regulations, and enabling compliance awareness across organizations. We have Mr. Kalyanji with us, who is the founder of Moon Tram Group, leading a diversified professional service group with a strong presence across the UAE, Singapore, and India. The Tram Group offers specialized services in corporate services, accounting and bookkeeping, regulatory compliance and consulting audit assurance, IT and technical services, investment structuring, and of course, AML KYC and AML CFT advisory services, including FIU-related support. He brings extensive experience working with UAE and Singapore-based banks, including leading private banks, and has a proven track record of supporting financial institutions and corporates in navigation complex, multi-jurisdictional, and regulatory landscapes. We have on board Mr. Abhishek Gupta ji, who brings across over 20 years of experience in regulatory and AML compliance with a strong specialization in implementing robust, risk-based approaches. He possesses deep domain knowledge and hands-on experience in AML, KYC, and AML CFT advisory services. His experience enables the firm to deliver practical value-added solutions in highly regulated environments such as GIFT City IFSC and other global financial centers, helping clients build effective and sustainable compliance framework. Today's webinar has been thoughtfully designed to share practical insights, industry perspectives, and best practices in the area of financial crime compliance. We are confident that this session will be both informative and valuable for all the participants. Once again, I welcome you all to the webinar. We look forward to an engaging and insightful discussion. So with this, over to you, Abhishek ji. You can take it forward from here.
Thank you, Namita. Thanks for the warm welcome. And I hope that, my screen is visible. Great. So very good evening, everyone. It's great to see, such a strong turnout from the GIFT City community. As we know that GIFT City is no longer just a vision, it's alive, and great to know that. Top of that, it's now becoming a global financial hub, correct? But when we are receiving this status of global financial hub, it's also there are a lot of global scrutiny as well, correct? So with like now we know that there is a deadline in March 2026 for the NISM, and then the recent amendment happened in 2025 related to AML amendments. So these are the couple of new things. So don't worry, we are there to help you out, and we will do the gap analysis. Doing business and staying compliant has narrowed, but they are definitely helping hands. And today, what we are targeting is not just about reading the rule book, but also we'll try to take some question answers. We will try our best to give you some practical situations or survivals. We are going to look at how to protect your license as well as the leadership from the increasing cost for non-compliance. So let's start. Before we start, we'd just like to read through the disclaimer. The information provided in this webinar is just for educational and informational purposes only and does not constitute legal, financial, or regulatory advice. While we strive for accuracy, the Indian AFCA regulatory landscapes are subject to rapid changes. Participation in this session doesn't create a consultant-client relationship. Please consult with a qualified professional regarding your specific firm's compliance obligation under the PMLA 2002 and AFCA AML guidelines 2022. Now it is 2025 as well. So as Namita already briefed about Moon and Triumph. So Moon, that they are in the GIFT City from 2014, and Triumph, we have a strong presence in Dubai, UAE. We are catering to CAT 3C, CAT 4, and many other regulated entities in IFSC and ADGM, which is you can say the financial free zone in Dubai as well as in Abu Dhabi. Apart from that, we cater to many other non-financials and financials entities within the UAE jurisdiction and in Singapore as well. So our client base is banking companies, wealth management, fund and asset management firms, insurance, reinsurance, DNAPP. DNAPP, we call it designated non-financial business and professions, and others. Others could be some leasing company, shipping company and all, because AML is applicable to them as well, though they are not dealing in a financial segment. Now coming to the main topic, the mandate, global and national framework. The mandate is to prevent money laundering, terrorist financing, and to prevent the money laundering, terrorist financing, and proliferation financing within the IFSC. This is the mandate given by the legal pillars, which is PMLA, Prevention of Money Laundering Act 2002, the primary national law. So when we say primary national law, it means it's a federal law. Federal law means within India. GIFT City is within India. So top of that, we have primary national law. After that, we have AFCA guideline 2022. So all the entities who are registered, and authorized by AFCA, they have to ensure compliance, AML compliance, PML within the PMLA Act in the GIFT City. So in short, we have national law and then we have guideline issued by the AFCA, correct? Apart from that, we have reporting authorities like FIU. All the reporting will happen through FIU. FIU registered, that's why registration is quite mandatory. And this is how the information will flow. If we need to report anything, the guideline is there, what need to report it. So the information should flow with the help of FIU. Now, whether this AML law is applicable to all, yes. Though there are some exemptions given by the the FCA regulation or guideline, we'll discuss that as well in following slides. But in short, yes, it is applicable to all whosoever are registered and authorized by FCA. Let it be banks, fund manager, brokers, leasing company, shipping company, aircraft, whatever, so it is applicable to all of the registered and authorized entities within FCA. Governance and risk management. So we know that what is governance, correct? After the failure of Enron and all long back, and recently it happened with one of the company in India as well, Satyam, correct? So those were governance failure. So the government and all the regulatory authority within not only in India but globally, they have taken a lot of effort to ensure that the governance and risk management functions are quite strong within an organization. Correct? So this is how it is the situation with AFCA as well. AFCA has given a guideline wherein the principal officer. So here in this presentation, we are just targeting AML, correct? From that perspective, sanction compliance. So principal officer and designated director are a mandatory position because they are responsible for overall compliance and reporting to FIU IND. And because the governance will take place, how will ensure governance unless and until the responsibility is given to some senior management. And this is how the expectation from the FCA that the principal officer, designated director are responsible to ensure compliance, AML compliance, sanction compliance, and reporting to FIU IND. Correct? Now the mandatory qualification certification, they introduced recently, one circular which says that mandatory certification is required from these two senior management, individuals, and they have to complete NISM FCA 01 certification course, which is, I think the deadline is March next year. And for any new joinee, the deadline is from the date of his joining, within 4 months, he has to clear this certification, correct? Now from the risk management side, since the topic is just the sanction compliance, so enterprise-wide risk management, we call it AML business risk assessment as well, ABRA, correct? So this assessment is quite important. Why this is important? Because unless and until we do this assessment, we will not get to know what kind of risk mitigants are required for your particular organization. We cannot take a general approach, or we cannot assume that your business is at high risk or low risk or medium risk. There should be some scientific way to gauge this risk, correct? That's why we have, this tool, which we call enterprise-wide risk assessment. How we do that? When you deal with multiple parties, say, for a business, take an example, for your business, you are dealing with client, correct? You're dealing with your product, you're dealing with your delivery channels, you're dealing with multiple jurisdictions, you're dealing with clients who are based out of multiple jurisdictions, you're dealing with a product which are coming to you from multiple sources or multiple, jurisdictions. So there are a lot of things are involved depending upon your nature of business, correct? So in that situation, we have to ensure that your company doesn't become a vehicle for the money launderer. Correct. So how we'll do that? We will do the analysis, for each and every party stakeholder with whom you deal with. And there is a way for that, and we use that tool. We use our expertise, knowledge to do that. And based on this activity exercise, we'll get to know whether your enterprise is at low risk, medium risk, or high risk. Depending upon your situation, we will take the management approval, and the management is responsible. Again, it's a governance, correct? The management is responsible based on the outcome to take an approach, which is the regulatory expectation. As per the regulatory expectation, they have to ensure that risk is there. But yes, we have the control, to mitigate that risk. And based on that, the residual risk is at low risk. The idea is to keep the risk minimal. And all this documentations is quite important because this is applicable for the entity who the FCA says are exempt. So that's why this is kind of, mandatory requirement, even though you are exempt. Sanction compliance and AML, again, there is a process for that. And these are the couple of, things which is, I believe that these are mandatory for each and every organization. The last, which is the AML consultancy and on-site services. This is something, it's not mandatory that you have to appoint a consultant. No, it's not mandatory. But it always goes to have, some expert within your team to whom you can approach as and when is required. So what are those, the couple of, steps or fields? Say the first one is KYC. We know what is KYC. Anyway, we are going to cover this in following slides as well. The name screening. I will tell you what is name screening, but I'm just kind of, trying my best to give you an idea that, what does it require? So customer due diligence, the money laundering risk rating, the client onboarding and periodic review, the AML audit, all these are mandatory. All these are mandatory for, for the FCA license entities. So now moving to the next slide, which is name screening and sanction compliance. I will say, the name screening is the backbone, for the AML rules and regulations. The name screening is the first step that you complete to ensure that whether you should deal with this particular entity or individual or not. Correct? Because when you do the name screening, when the proposal will come to you, whether you should deal with this person or entity, that time you do the name screening. So the name screening process starts when you establish the relationship with any person or entity. So at the time of client onboarding, you do the name screening. After you establish the relationship with that person and you get to know that, okay, that person looks nice, and we can establish the relationship with him. What if the person is into some sanction list after 6 months? How will ensure that that person remains clean, during your business tenure? So for that, we do ongoing name screening. Apart from that, when you do a transaction, you capture multiple details about the client, like, his size of business, nature of transactions, how many transactions he will do, what is his net worth, multiple details you capture, correct? If you find any deviation, major deviation, significant deviation, I'm not saying that, he said that, okay, I will deal in, say, 100 million, and then he's just, he crossed that border and now he's dealing in 110 million. So you will know, I think significant, again, it's a business decision. So you will do the name screening that time as well. So how is served? What is the name screening? The name screening will tell you that some individual or entity, whether they are part of any designated list. What is the designated list? Correct? The designated list is a list published by, various, I will say example, UNSC, United Nations Security Council, which is a authority which ensures peace among the world, that's why this is the purpose of UNSC. So there is a committee within UNSC. The country, individual country, they will recommend some particular individual or entity that, they are into terrorist activity or they are part of money laundering activity within their organization or within their country. So once the name is referred to committee will take their, they have their, steps, they follow the steps. And if they feel that, yes, this is not just allegation, the person is actually involved in some terrorist activity, they will register, they will publish the person or entity name as a terrorist list or, and then the person we will call from the ML perspective, it's a designated person, the name is appearing in the designated list. So the designated list is not just published by UNSC. There is other authorities as well, like, the EU or the UK. India has also their own designated list at country level, which we call the national law, right? So, so we will get to know if the person, individual or say entity, they are part of any, designated list, then we cannot take. we cannot establish relationship with that particular entity or client or individual. So this is how important it is. That's why I call it, the backbone of any AML process or procedure. Now, to whom we, to whom we apply the name screening. So entities to be screened. So all clients, individual and entities, as I mentioned, individual and entities, they're part of name screening. Ultimate beneficial owner. This is very important. When you are doing a business with some, entity, this is very important to know who is behind that entity. You know that there are so many means to where, the person, the ultimate beneficial owner, they can hide their name. They will, if they are clean, not clean, doesn't matter, So from AML perspective, we'll have to understand who is the ultimate beneficial owner. And in an ultimate beneficial owner will be an individual, or who is the person who is controlling the person. So we'll have to do name screening on them as well. And then all the directors, authorized signatories, power of attorney holder, we'll have to do the name screening on them as well, because they influence the business decision. They who are holding some stake, KYC requirement, individual versus corporate. As we know, KYC stands for, know your client. How you will know your client? So you meet the client, you accept the documents from the client, correct? This is how you know the client. So when we meet, we document everything. The name, the photographs, we collect the identification document, we call it passport, Aadhaar, PAN, voter ID, but passport, I personally believe that passport is the main authentic document, because all this designated list person, normally they publish passport number. And current address proof, source of wealth. Source of wealth is, just not source of wealth, but source of income, source of fund, source of wealth, collaboration between source of income and the fund and the wealth. There are so many things, but we have just mentioned here source of wealth. We need to know what is the source for the income and how we accumulated the wealth and how we collaborate the income versus fund, and then how we generated the wealth. All these things needs to be generated. And this is how we will say that I know the client. Because the regulatory expectation, the minimal expectation is that you should know the person with whom you are dealing with. Unless and until we know the person, we cannot establish relationship. And AML is not just a violation. It will attract the criminal penalty as well. And when we say criminal, the things really go very bad. They take very bad situation, it go really worse. It can go worse, So the individual entity, they should really deal with the client very carefully. Now, from the corporate perspective, how we'll know the corporate, we will take the certification of incorporation, proof of address, the government governing document, articulation, all those stuff, the ownership structure chart to know who are the ultimate beneficial owner, and then identification document of UBO, director, authorized signatory. There are so many lists, we cannot compile all the list of document in slide, but this is just for references. And we can go beyond as well, depending upon the situation. If you feel that, yes, the person is at high risk, when you remember that I told you about the ABRA, correct? AML business assessment. If your business is at high risk, depending, when we do that exercise, if your rating is high, even we can take some strict compliance measures, Now, customer due diligence. After you did the name screening, after you know who are your client, beyond that, there is a process we call due diligence. So what do you mean by due diligence? We'll get to know further that, what is the intention, why he want to establish relationship with me, why he want to buy this product, how much he want to spend the money, what is his asset size, how many dealings he will do in a year, all these things, all the details we capture when we do the due diligence. So the due diligence will come at the later stage. The first step is name screening, KYC, then the due diligence. Again, we do the ongoing due diligence. Suppose the person says that, okay, I will deal with, I will invest 100 million. Now, later on, he says that, no, I want to invest 200 million. Before the income was say, 100,000 USD. Now it has come to, 200,000 USD. So each and every time we will do the revised CDD. That's why we call ongoing CDD and all. Now in the CDD, there are two approaches, I will say three approach. One is simplified, standard, and enhanced due diligence. Simplified, normally we don't follow. We normally follow standard and enhanced due diligence. Enhanced due diligence is mandatory for high-risk client, wherein the person, the company will also involve senior management for his approval. Whatever due diligence they do at their end, they will take the concurrence from the senior management as well. And this is mandatory. Now they have introduced VCIP and CKYCR. VCIP is the video-based, know your client process, wherein the company has to ensure that the system is foolproof, and they will take the help of IT, that everything is on real-time basis. The system should tell that, in which jurisdictions you are best in, and everything is happening online on real-time basis, So this is what the requirement, the guidelines says, the circular says, issued by IFSC, that VCIP, these are the minimal requirement. But yes, they have okayed this. This is good to know. And CKYCR. This is, whenever you collect KYC document, it should be, uploaded in the central KYC records within 7 days after you collect the information, or if there are some changes, again, you have to re-upload. So first you will pull out the information about the client from the central KYC record. If you don't get the record from there, then you have to ask the client to provide the in document, like, the physical copy of the KYC document. And then your responsibility is to upload that document into the central KYC record. So this is what the new things has come up in 2025. And if you have the policy and procedure in place, please update your policy. So yeah. Oh, this is quite serious. The targeted financial sanctions. Targeted financial sanctions is, I will say, the FATF. FATF is Financial Action Task Force. It's an international governmental body. It's not a regulator, but it is a kind of authority which recommend, their best practices, which the countries should adopt in their financial system. And at the moment, I think more than close to 200 countries are part of, directly and indirectly part of, they're member of FATF and sort. So the recommendations 6 and 7 of the FATF, they cover this targeted financial sanction. So like, when we provide training and all, like, there are more than 50 slides on this particular topic. So, but again, the idea behind this webinar is just to make you familiarize with the requirement, the at least requirement, So from that perspective, I will just tell you that targeted financial sanctions, I will just divide this into two words. One is targeted, then the financial sanctions. So targeted, who are targeted? So the targeted is like, the UNSC, as I mentioned, then the North Korea, the Russia, the Taliban, Al-Qaeda, these are the designated list. We call it targeted. And then the individual country, they have issued a couple of lists, the name. When I say list, it means it carry the name of the individual as well as the entity. So they are the targeted. We have to target them, that, we should not be dealing with them. This is the logic and idea. What is the financial sanction? So sanction means we know that, we are putting sanction means we are freezing the assets. We should not be dealing with, we should not, we should ensure that, the targeted client who is holding assets within our company, they're not taking any economical benefit out of their assets. All these, we call it in short sanction, correct? So we are putting financial sanctions on them. So it is a bit broad. It's not just like, this the goods, but also the tech part. Also, like, the person who is directly, indirectly involved with that targeted individual or entity, their assets also. So it coverage is quite large, so we'll have to ensure that if anybody is involved in proliferation of weapons of mass destruction, say example, nuclear bomb or anything like, which can have a huge impact, in a mass basis. So if the individual or entity are dealing with those kind of company, entity or individual, we should not deal with them. How we'll get to know whether the person is involved in those kind of activity? Again, is screening, name screening. This is how we'll get to know. Once we get to know what is our roles and responsibilities, our responsibility is to freeze the assets. Immediately, we have to freeze the asset within our organization. If we know that, okay, we are not holding the asset, but some other company with whom I know that, okay, the person has account with some other bank, we'll have to inform that bank. After you did all these activities, what you will do, you will inform to the regulatory authority. How you will do that? You will inform to AFCA as well as you will inform to FIU. FIU is Financial Intelligence Unit, and then prohibit, like, do not make any fund, financial assets or economic resources available directly, indirectly to or for the benefit of any designated person. So these are the, like, anyway, we are doing all this exercise just to prohibit. So we know that, this is anyway going to happen. So in short, like, this is very, I will say, crucial step. And the main challenge with the financial institution is that, say example, dual goods. Dual goods is, say example, like, chemical. One chemical you can use for making detergent, the same chemical you can use for making atom bomb as well. We don't know. We are not expert in that, correct? And this is where the challenge comes. How you will handle that situation, correct? This is a big question mark. Suppose in IT, your client says that, hey, I'm IT provider. I just do, IT business. Since we are into different field, we don't know what is IT. We are into financial market. We are simply selling the mutual funds, correct? So we are good in selling mutual funds. But our client is on dealing with IT product. We don't know what is IT, but we have the balance sheet and also we say, okay, fine, go ahead, we can onboard you and you're good to go. But we don't know whether this IT product which he is using, whether he is using for, can be used for the good reason as well as for the bad reason, correct? So these are the challenges. This we take care, and we handle the situation when we deal with our client. But it's a very vast, I will say, situation. But one should deal very carefully because, knowingly, unknowingly, sometimes the financial institutions, they become the part of, I will say, terrorism financing or money laundering vehicles. So please be careful. Now, coming back to the mandatory reporting to FIU IND, we heard a lot of time about the FIU, correct? So what is FIU? FIU is Financial Investigation Unit. What is the purpose of FIU? They collect the information, they analyze the information. What kind of information? So these are the information like, the suspicious transactions, cash transactions, cross-border wire, counterfeit currency, non-profit organization. So the AFCA has given a threshold for the cash transaction. It says, the regulation says that 10 lakhs or aggregate in a month should be reported. With the help of FIU, you have to report this. Cross-border wire, 5 lakhs. The moment you cross rupees 5, these are not the USD, these are rupees. Counterfeit, any transaction, any note is counterfeit, you have to report. Non-profit organization beyond 10 lakhs. Suspicious transactions, again, is it part of AML? The money laundering reporting officer, when the internal SAR within the organization, the person will involve to money laundering reporting officer that, okay, I think that this particular gentleman or the entity looks like, suspicious, the money laundering reporting officer, he will do the analysis. He will take his independent decision whether this should be reported to the FIU or not. Once he believes that yes, it should be reported, then he has to report the STR to the FIU. And it should happen within 7 days time. There is a timeline given to that. correct? So all these things will go to FIU based on the information input received from the, from all the organization within the country, within GIFT City, they analyze, there is a big team, they analyze information and they publish the information, they share the information within global, all the FIU are part of Egmont Group, and they are connected there and they analyze all the information. And this is how the FATF use those information to when they recommend or they issue some recommendations at a global, like, for the entire world. And this is why it is so important. So please don't ignore, don't take FIU lightly. Do the registration, ensure that yes, you are reporting on time, because they are hefty fine. It's not about just fine. It's about your, reputation. It's about if they feel that you didn't report and the person was involved in some terrorist activity, then it's a criminal fine of a penalty. So you don't know where, what kind of things may go wrong. So please handle carefully. Now, scope and specific exemptions. Couple of exemptions are AFCA has offered a couple of exemptions, but truly to me it doesn't I will say not the direct exemption or clear exemptions, because again there are do's and don'ts. So the exemptions, it says the exemptions from AFCA guideline doesn't exempt any entity from the parent PMLA. Who is the parent PMLA? In the GIFT City, the parent PMLA is India. So it means it says that, the India PMLA Act is applicable, correct? Now, exempted entities must still adhere to basic AML CFT checks and transaction monitoring. So they say that even though you are exempted as per AFCA, but still you have to do the basic AML checks. What are the basic AML checks? We'll cover this in in the same slide. Which are the entities? They say that, okay, they are the exempted entities. So Global In-House Center, GIC. We know that GIC, suppose say example, Bank of America, they have office in GIFT City. They are dealing with their, other Bank of America offices like in-house, so those are part of Global In-House Center. International branch campuses, foreign university branch, it's very clear by the name itself. Financial crime service provider, like, BATF license. Within that, the financial crime is again a license, so they are exempted. Intra-group financial institutions. So say example, within group financial transactions are happening, but that is happening within the group, not with any third party, So those entities are also exempted entities. But they have also given the continuous obligation. What are the continuous obligation? They should route all the transactions through an IFSC banking unit account, correct? They should also do the AML business risk assessment on an annual basis. What is the purpose of that? When you are doing the ABRA, when you do that, you will, if you think that during that process, you will get to know that, okay, there are some red flags from the AML side. Again, you are not exempt. You have to ensure that highlighted red flag has been mitigated by implementing some controls, correct? So AML is applicable to you. To me, I feel that this is applicable, yeah. Adhere to AML CFT IFSC rule. Then again, this is what I was trying to say, that, then if there are some red flag, then follow the procedure mentioned in the AML rules and regulations to mitigate that risk. So yeah, so they say that there are exemptions, but there are some conditions associated with that. It's not a clear or blanket exemption. It's very important to know, we are dealing with, AML rules and regulations, and we should know what if we don't comply with those rules and regulations, whether I'm at risk. Our entity is a risk, not only entity, whether I am myself personally, I'm also, responsible or liable for some penalties. So we should know, those answers, correct? So there are three types of penalties. One is administrative, regulatory, and the criminal. When it comes to administrative, regulation says that yes, there are 10,000 to 100,000 rupees, not USD, rupees per failure. Suppose you have not done FIU or say STR, particular, 10 cases, then it will become 10 times. So how they decide the range from 10 to 100,000, that is entirely upon the guy who comes for the on-site inspection. If he feel that if the case is severe, he will put you 100,000 penalty. If he feels that, okay, it's not that serious, he will think that, okay, 10,000 is fine. But what is the regulatory and the criminal? Again, it depends on the nature of the crime, the failure. If we think that, yes, this is something, this breach is quite serious, then, and it can have a, it can have a major impact, say terrorism related stuff, and you didn't report the STR, then it's a criminal activity, correct? So if this is criminal, then imprisonment, unlimited fine. You have seen that, some banks, they have paid 100,000, some banks have paid in crores. So this is why we call unlimited fine. And sometimes the regulator also put fine on individual capacity. The senior management, they will say that, okay, the responsibility ensuring compliance, AML compliance is the responsibility of the senior management. The MLRO responsibility is to ensure that, yes, he has passed on the information, he has trained the individual, and he is working as a bridge between the regulatory authority and the organization. But implementation is the roles and responsibility of the senior management. So that's why sometimes the regulatory authority, they put the fine on the senior management, and sometime in MLRO as well. If the regulator or, after the investigation, it appears that, that particular gentleman, probably, he failed, to when he was delivering that particular duty, Regulatory fine, it can be based on the turnover, they can cancel the license, they can suspend the business, all these are regulatory fine. So now we are about to, okay, so these are the summary and the way forward. The summary is compliance is non-negotiable and follow the FATF risk-based approach. It's sometime, some of the organization, they feel that it's a cost, or maybe sometimes they think that, okay, everything looks fine, why to do so much things, but when they realize that, yes, there is a hefty fine, there are reputational risks involved, when it comes to reputational risk, it means that, they cannot open a branch in overseas locations, they cannot increase their businesses, there are so many restrictions will come, correct? So when they feel all this problem, then they understand the cost of this AML, compliance. Robust risk assessment, they should do, comprehensive CGT and the mandatory reporting to FIU IND. These are really important. Registration on FIU IND portal is prerequisite for commencing business. It should be done before you commence the business, or max to max within a month's time. Within a month's time, when there is genuine reason for that, you cannot just simply think that, okay, I will do after a month. No, it should be done. That's what we call prerequisite. Before commencing the business, you should do the registration within the with the FIU. The FCA, AML, CFT, TFS framework is built on the FATF RBA model, risk-based model. The FATF approach itself is risk-based approach, and our framework, the AML framework within our organization should be, should be based on the RBA model, risk-based approach. There cannot be one straight line. Everything is everything is calculated, everything is scientific. We cannot take a casual approach. We cannot assume that we should do this way. No, there should be reason for that. TFS compliance, screening and freezing is an immediate and continuous obligation. We cannot say that, okay, I have done screening once, no, it should be ongoing basis. What if the guy is involved after 4 months in a terrorist activity? How will get to know? So the system will flag, and always use reputed system, don't subscribe anything which is cheap always. It's good to go for that, but please evaluate at your end that, yes, it is something the regulator has mandated and it is going to serve your purpose. So first, you'll have to understand from the requirement side as well. Action item, certify, an ensure PU and designated director complete NISM. This is really mandatory. Update policy wherever there is a update in the policy, please update your policy. Please ensure that the training has been imparted to all the relevant person and record it. Any changes in the business structure, working model, designated positions should be informed to the FIU and regulatory authority. It doesn't mean that you have done once, it's fine. What if, like, if your new PO has joined, you should update the FIU, correct? Validate portal, ensure active registration on the FinGet 2 portal. It is again, like, as I mentioned, that prerequisite, you have to do that. There is no escape. Conduct comprehensive business AML risk assessment if not done recently. I will highly recommend, please ensure that, your AML risk assessment has been done, and it has been done on an annual basis. Because even though, as I mentioned earlier as well, even though you are exempted category, this is something mandatory for you. So it's a must, review and strengthen AML, CFT, TFS screening procedure. Again, like, if you use a good system and tool, whenever there is an addition or deletion in the designated list, it will be accordingly the service provider, World Check service provider, they amend their list within their system. So, but again, as an organization, we'll have to ensure that yes, we have subscribed to a reputed name screening tool or software. So as in Moon and Tram, what kind of services we provide or where we can help you out. It's not just just a couple of, item, which is, I think, on high demand. But again, based on your individual requirement or, customization, we are there to help you out. From the AML perspective, whatever you want, depending upon your business size. First, we will assess your business depending upon the nature of risk or the level of risk involved, AML risk is involved, we'll take appropriate action and we'll guide you, advise you, and we'll provide the policy brochure, everything. So there's a huge, like so many things to do, but we take care of AML side. We also take care of sanction and regulatory compliance. It includes FIU as well. Compliance and AML training. If you want training, we are there to help you out. Compliance advisory, we can help you as and when, whatever situations comes to your way. Company setup, and the software solution. So this was all about, like, from the AML and sanction compliance perspective. Now we have also covered AFCA, AML, CFT, and KYC regulatory update, and we have covered 2025. So yeah, in November 17, 2025, there was some NISM. Yeah, so NISM certification course was introduced by AFCA, in November 17, 2025. It says that the timeline given to the existing PO and designated director is March 18, 2026, and 4 months from the launch date, and any new appointees must complete it within 4 months of their appointment. So for the new person, new joinee, has to complete within 4 months. Enhance VCIP and digital KYC standards. Again, as I say that, they have confirmed that yes, you can use the video for the KYC purpose, but please ensure that the anti-spoofing system, or use your AI tool just to ensure that yes, the system is foolproof. There is no, I will say, the problem related to, say, face recognition, or say, the correct geographic location, it is not capturing. So please take care of those stuff, and then you're good to go. You can use this video CIP and digital KYC standard. So anti-fraud tech, like, reporting entity must now use artificial intelligence for face liveliness, spoof detection, and anti-defect checks during the video process. So all these things you'll have to ensure, then you can use. Simplified documentation and KYCR mandate. This came somewhere in June 2025. So it says that central KYC records should be updated within 7 days of receipt, And whenever you want to get some KYC document, you should first refer to this portal, the record. From there, if you're not finding any KYC, you have to collect it in physical form from the client, and then please update this within 7 days after you receive that physical copy of the KYC document in this central repository. Registration on FinGate circular, this came somewhere in Feb 26, 25. Yes, this is very much important, and they have made it mandatory by issuing the circular in Feb this year. So if you have not done, please do it, because, it is simply, you're attracting trouble. Basically, they can impose penalty or fine, or maybe they can issue some warning letter. We never know. It depends on the site inspector who will come for inspection. But why to take risk? It's simple procedure, and you simply go and register with, FIU. Fund management, the regulation came in this year. I think the PO qualification, they said that, the PO with a 5-year relevant experience should have postgraduate diploma. This is desired. And if the PO is having 15 years experience, then probably the rule has been relaxed. But the person, this is quite compulsory. The person should be, should be, maintaining the fit and proper criteria. So the fit and proper criteria, to my knowledge, like, normally they give some questionnaire, or we'll have to prepare a questionnaire basis that, say, insolvency or any flag of the name, or maybe the person was involved in some criminal activity, any charge against the person. So we'll have to check on those parameters to ensure that he has fit and proper, and he has relevant experience and all. Yeah. So this is all about, these are our details. Please get in touch with us, and feel free to reach out to us for any free assessments. If you need any kind of help, any support, please reach out to us anytime. And these are my, our Dubai number, myself and Kalyanji. We are based out of Dubai, but we keep traveling to GIFT City. If you need anything in the Dubai as well, like, we are there to help you out. We have a same kind of setup in Dubai. We help the entity to establish their entity in the IFSC ADGM, procure the financial license, let it be, fund, asset management, the wealth management, whatever, and also after establishment, if you want any kind of outsourcing services, because here the IFSC allow you to outsource certain mandatory positions, say example, MLRO, compliance officer, finance officer. So we have a big chartered accountant team and all. We do all those, provide all those services. So yes, we are there to help you out in Dubai as well as in GIFT City and in Singapore, and we have a couple of other jurisdictions as well through our business partner. Yeah. So this is all about.
Thank you so much, sir, for the detailed insights on these topics. Now I would like to take up the question and answer session. So all those who have got concerns can please raise their hands so that I can enable the mic. Meanwhile, the questions which have been put in the chat box are already answered. Yes,
So, yeah. So Namita, like Kalyanji and Ashish all are enabled. Like.
Yeah.
Yes, Kalyanji and Ashish
great.
are there. Let me just enable
Great.
the mic. So the first question is coming from Reema ma'am. So ma'am, I'm just enabling your mic. One moment. Yes, you can please put forward your question, ma'am. Reema ma'am, you can unmute yourself.
I think Rima also mentioned in the chat box that I'm a qualified CS and I'm looking forward for PMLA compliance in my organization. Yeah, definitely, ma'am. You can share the details. I'll put email IDs which are there in the presentation also. You can note down. You can send an introductory email. We will get best connected with you along with the team.
All right. Next question we have from Chinmay sir. Sir, you can unmute your mic.
Hello. Yes, yes. Thank you very much. Thank you very much, Mr. Gupta, for the insightful presentation. First of all,
My
it was
pleasure.
indeed very much informative. So I have a small query actually. You just mentioned that the business risk assessment that is even applicable for the exempted category of regulated entities operating within GIFT IFSC. So I was just curious to understand about the constituents, basically what sort of activities are checked under that and how Moon Triumph team can help us in that actually. Because
Yes.
we fall under the exempted category, so need to understand this in a better way. Thank you very much.
No problem. So again, Mr. Chinmaya, thanks for attending this seminar event, and really very great question. Because you are, under exempted category, certainly, you will be curious to know why, and at what level this law is applicable. So as I mentioned that, there are so many, I don't know about your business situation, definitely we can personally connect on for that purpose. But when you have a business, you deal with multiple stakeholders, let it be like individual entity, your supplier, your service provider, you have into service industry, correct? So when you deal with those stakeholder, you'll have to ensure that yes, that person is clean, they are free from, they are not in designated list, the country they belong to, suppose your provider is from Iran is a high risk from AML side. If the provider is from USA, it's fine. What if like your delivery channels, if they are part of some criminal activity directly, indirectly, because when you deal with entity, it's not that you are dealing with entity, that entity is also dealing with someone else. What if that entity with whom they are dealing with is a flag, individual or entity. So this is how during this exercise is quite extensive. It's not straightforward or straight through process. It's quite extensive. And as we mentioned that FATF take a RBA approach, risk-based assessment. So it's an open environment. You can go to any direction. It can lead you to any direction. So when we do that exercise, we'll get to know that where to restrict, where to start, and how to conclude. So this is how it is. So we do that, and it is very much, you should also follow the AML law, and this is applicable to you as well.
Thank you very
Thank
much.
you. Thank you, sir.
Thank you, sir. Thank you, Abhishek, sir. So next question we have from Mittal Chauhan. Remember, then you can unmute yourself. I've enabled the mic again for you.
Thank you. Sir, my question is related to CBWTR. That we are the reinsurance broker and dealing with the foreign clients. And is it compulsory to submit the CWTR for us, because our bank is already provided this detail of the transactions to FIU?
See, yeah, ma'am. So basically, since you are registered with FCA, correct? You are holding the license, correct? So you will have to ensure compliance for your firm. Whatever bank is doing, that is none of our business, correct? If the bank is, because you are holding the license, you are regulated by the FCA, you have to ensure the compliance. That's why I mentioned that FIU registration is applicable for each and everyone. Whosoever holding the license, registered, and doing the business within GIFT City.
Okay, sir. Yeah, my second question is related to this AML guidelines 2022. In that, they informed that AML audit is required. So, is for that external auditor is compulsory or internal auditor?
Yeah, so basically there are two type of audit. I will say three type of audit basically for in this particular topic. One is statutory audit, that is something, finance audit, which is mandatory, correct? Internal audit, just to evaluate whether your system and function, within the organization, internal control mechanism is effective or not, correct?
Yes.
And that is independent audit. AML audit is something which will give you an opinion about the AML controls, what steps you have taken, what are the improvements you can do within your organization. And this is what the expectation from the regulator side, that you have done this audit. So here we are referring to AML audit.
Okay, so it is for the external with the external auditor or internal auditor?
No, it's a separate, means it's a
It's
AML
a
audit. Yes,
Yes.
separate.
Okay, sir. And you have already told regarding the user ID deactivations. So, user ID is deactivated if we are not open since so long. So it is compulsory to active that user.
Yes,
Yeah.
because
So
unless, yeah, please complete. Yeah, sorry.
yeah. So how many days we required to be open if the user is deactivated?
See, this is something technical, how many days? So the regulator expectation is that FIU reporting is mandatory, correct?
Yes.
And
Yes.
and it says in the regulation within 24 hours, some cases within 7 days, correct? As we know
Yes.
that STR should be reported within 7 days, correct?
Yes.
When we refer the TFS guideline, it says that, the asset should be frozen within 24 hours.
Yes. Sir.
So, and it should be reported as well, correct?
Yes.
So
Yes,
how will
sir.
it form? So it means that, your FIU ID or this portal, should be active at all the time.
Okay. Because we
It should
are
remain
submitting.
active.
Yeah, we are submitting the report by the principal officer, but for the designated director, it is not much they are opening. So it is deactivated.
I think PO and designated director can be the same person, but if your PO is the MLR, it's fine. Don't need
Yeah.
to it's fine. Yeah. If one guy is working, it's fine. Good.
Okay. And sir, I want to also understood about the CB1 report. If it is compulsory to submit the CWTR, so in a CB, we have to submit a CB1 report in
Yeah.
FIU.
Jay,
Okay. Yeah. Thank you, sir.
my pleasure. Thank you, sir.
Thank you, sir. Thank you, ma'am. Rima, ma'am, if you still have any question, you can please unmute yourself.
Yes, yes. Thank you so much for such a nice presentation. Ma'am, I have one question. I have already cleared the AML examination and present, and I'm working for NJ AMC, and I'm looking for PMLA compliance at as a qualified company secretary. I'm not a principal officer, but I'm looking for IFSC compliance as well. So, do I need to appear for this NISM exam, which you said IFSC 01?
Yeah, NISM is mandatory as per the circular. They have made it mandatory
Alright.
for PO and the designated director. So if you are
Okay.
holding these two positions, certainly you have to clear.
Okay, okay. Thank you so much, sir.
No problem.
Thank you, sir. Thank you, ma'am. So next question we have from Rohit Palsa. So your mic is enabled. Rohit, sir, you can unmute yourself.
Yeah. Okay. So my query was if we are entering into any business relationship with a foreign entity and such entities are not complying AML or CFT compliance of their respective countries. So can we have an agreement with them based on that? If they are not complying the AML and CFT of their respective country, any liability or the burden will be passed on to us because they are not complying such requirements?
See, again, Rohit sir, it will depend. I don't know about your nature, business activity and all, but it is very much important that, you do the KYBP, know your business partner. When you are dealing with any entity, you should understand what kind of risk I'm taking with that relationship from the AML side as well. But as you mentioned that, if that entity straightforward says that, I don't know what is AML, I don't have any procedure for that. It's a business call. Whether you are blindly to take that risk. So depending upon your nature of business, the size of, the transactions, which you are planning to get into with that particular organization, you have to take a business call. But if you'll ask me, I will certainly tell you that at least you should do some due diligence. At least what you can do, you should know the organization structure. You should know who are the director, authorized signatory, UBOs. You should know, what kind of license they are holding. You should know in which jurisdictions we are dealing with. You should know whether the director, UBOs, or the authorized signatories, their names are clean. At least the basic step you should do. So it means you can demonstrate to the regulator that yes, it's not that blindly you have taken the decision, but you have put some effort. But you cannot educate them, correct? And this is something business decision you have taken. So I think, depending upon again, as I said that I don't know much about your nature of business. I'm not in right position, but this is what is the suggestion I can help you, that at least you should do something which is in your hand. Right?
Okay. Okay. Thank you,
Yeah.
sir. Thank you for your
No problems. My pleasure.
Thank you, sir. So last question we have from Himanshu. Just one moment, I'm enabling the mic. All right. So your mic is enabled. You can please ask your question.
Yeah, hello everyone. Myself Himanshu Lodia from Augment IFSC Private Limited, and we are a trading member of IIBX. So my total client base is based out of India only. So the funds I just received the fund from Indian clients. So would it be possible? Would it be compulsory to that fund treated as a CBWTR?
Yeah, so when you receive a fund, outside GIFT City, even though India or say Ahmedabad also, this law is applicable.
So,
All right.
So it will be
Himanshu,
treated
Ashit
as
this
cross.
side. I have
It
in
will be
fact,
treated.
yeah.
Yeah.
So
Yeah.
I have in fact answered this, wherein I mentioned that GIFT City entity is treated as a not resident in India for the purpose of FEMA regulation. And when I say not resident in India, which means any fund being remitted, if it is being remitted for capital purpose, it will be under LRS or ODI. Or if it is other than capital purpose, then it will be, you need to define the nature of the transaction in the purpose code for every transaction. So it will be reported as a cross-border transaction only.
Thank you. All right.
Okay, so I think we are done for the question and answer session as well.
And
Thanks
rest of the
everyone for
questions we have
joining.
reverted onto the chat box. And if still there is some query by anyone, you can reach out to us over an email or a call. And as Abhishek ji mentioned, that we are also open for free basic assessment for your IFSC unit to let you know what kind of, so it's kind of a basic health checkup we can do.
Yeah.
And then, of course, whatever is the actual services, we can render those services later on. Yeah. Thank you. Thanks, everyone.
Thank you,
Thank you,
everyone.
sir.
Thanks
Thank you,
for
Abhishek,
joining.
sir. Thank you, everyone.
Thank you. Thank
Yeah.
you. Bye-bye.